Hi, this is Mani from BSc to NSE.com. So in this video we are going to talk about how to identify formation of a positive or a negative trend channel, basically using candlestick charts. So for a positive trend channel, I'm sure all of you are familiar that a candle is formed based on open, high, low and close. So if you're not familiar with the basics of candlestick, I would suggest watching my other video which talks about the basics. So in a positive trend channel, I will show you later in this video that we will look to compare two candles wherein we'll try and identify two candles with double positive, wherein today's open is greater than yesterday's open, today's low price is greater than yesterday's low, today's high price is greater than yesterday's high, and today's close is greater than yesterday's high. And both of today's candle and yesterday's candle should be a green candle. And I'll again show this later in pictorial way so that you kind of clearly understand. So this is what we are going to try and identify in the chart. Similarly, for a negative trend channel, today's open should be less than yesterday's open. Today's low should be less than yesterday's open. I haven't put that here, but it's exactly the vice versa of what you see here. And today's high should be less than yesterday's high, and so on. So let me show in a graph like how it's gonna look. So I've just made some shapes in MS Paint here. On the left, you see what I'm talking about is a double positive candlestick pattern, which is the sign of bullishness or a positive trend channel, wherein you can see that I'm sorry, this is the low price of yesterday's candle, and this is today's low price, and you can see that the low price has gone up, the open price has gone up, the closing price has gone up, and the high price has also gone up. So in all ways you can see that in these 2 days the buyers have totally dominated, and this will actually put the bearish or people who are going short in a state of panic, and further short squeeze can be expected. So this is and again I'll show in a chart like how this is very effective in identifying a good entry point to go long or to buy a particular stock. So this is the reverse of double positive candlestick, wherein this is a double negative candlestick which is kind of trending lower, wherein the open price and the low price and everything is like going lower. You can see that the open price between the two candlesticks are lower, between yesterday's candle and today's candle. The closing price is also low, the high price is also low, and the low price is also low. So in all four factors that it is a kind of going down, and both are negative candles, wherein the closing price, the market through the day was facing selling pressure, and the closing price was lesser than the open price in both the days. So I'm gonna try and identify double positive and double negative candlesticks like these which satisfy these criteria, and show you like how it's extremely useful. So we're gonna take Bank Nifty and Nifty charts. So this is Bank Nifty chart, the daily chart for the last 3 months. On the right side you can see that it's scaled from 15,000 to 17,500. So here on this chart from the left to right for the entire 3 months, we're going to try and identify the positive double positive candlestick and double negative candlesticks. So first I'm going to just blindly mark, then we'll kind of discuss. You can see on the left end of the corner that we see a double positive, and then followed by a double positive again here. So I'm not going to mark this again because it'll kind of make the chart look extremely cluttered, or I can just mark it just in this case. If it's going to look cluttered, as you can see here, this is not a double negative because the low price is not lower. It's kind of a horizontal, a couple of negative candles with just horizontally placed. The yesterday's low is actually lesser than today's low. Ideally, you want the second candle to drop lower. So this is not a negative, double negative for me, and this is again a this is again a double positive, but I'm not going to mark this because we got a buy signal here at the left end, and then you see that you get a double negative, so I'm going to mark that in red box. Alright, and after this double negative, you can see that there's been no double positives here. Mostly after that, there's no double positive, and you can see one more double negative here, which is a strong double negative, I should say, and the market keeps drifting lower, and there's been no double positive after that. So you can see like one more double negative, and then finally by this time Bank Nifty has dropped from 16,500 to 15,200 in a space of maybe 1.5 months or 1 month, and then finally you get a double positive, and then you do get a double negative, I think, here, but then this is coming after Bank Nifty has gone down a lot. We'll again discuss this later. And then as we move forward, again, actually, if you see, these two candlesticks would have formed a positive, double positive, except that the first candle is actually not a positive. The first candle is negative, so this is like a partial upside candle or a partial uptrending. But to weed out the noises, it's better you look for only the double positive. You can see that a double positive candle gets formed here, and even though the double negative got formed, the next day itself Bank Nifty actually goes above, breaks the resistance of the high point in both these candles and goes above that. And after that, you can see that till date it has not actually given any double negatives so far. This is actually not a double negative because it's more a horizontal candlestick. It needs to be one below the other clearly, and you get another double positive here. And then markets today actually hit all-time highs. Nifty closed about 8400. So that's where we stand with this chart. So again, coming from let's kind of discuss the Bank Nifty movement here. So ideally what you want to watch for is you want to watch for a double positive candlestick after the price has corrected or come down a bit, and you should watch for a double negative at the top, meaning after the stock or the index has rallied a bit. So in this case you can see that the stock has rallied nicely, and then finally you get a double negative, which is a sign for you to exit or book profits. And then it keeps going down, and then market keeps correcting here. It keeps correcting, and then you get a positive signal. So the positive signal tells you that you need to go long here or start buying or cover your shorts that you made here. And then though you kind of immediately get a negative box, it again kind of goes up. The next day it breaks above the resistance, which tells you that this double negative was broken. So ideally when you come to the stop loss part, if you're going long here, your stop loss line should be the lowest point here. Again, the stop loss in this case would be the upper part here, the upper part here. So you can keep that as a technical stop loss, and as after that it just keeps going up and up, and so far it's not reversed after that. So this is in case of Bank Nifty. wherein it's been on a continuous upside. And when we see a double negative pattern, we should book short on the longs in Bank Nifty and look to go short. So that's how you should look to trade based on that. Let's now take a look at the Nifty chart. I'm gonna take the Nifty chart. Similarly, I'm gonna quickly mark the double positives and the double negatives here. On the Nifty chart, you can see that this is a double positive. On the left here, and then you get some more double positives here. This is actually not a double negative yet, and then you get the double negative right here, and then it keeps going down. This is not exactly a double positive. This is more a doji stick and then an uptick, and then further you again get a double negative here. This is again a doji stick, not a perfect double negative that you want, but you had a double negative here. And then finally you get a double positive here. And then it consolidates a double negative here again, which is more like this is a particular noise, wherein even if you went short here, as soon as this high, the upper resistance was taken out, you should again go long. And again you have a double positive here formation, and then Nifty further goes up and up and up. And again, so far it's not displayed any double negative so far. This is actually not a double negative. So it's been in a horizontal trending space, and this chart is not showing today's close. Today markets closed above the 84000 level, closing at a new high. So this is what I mean by a double positive or a double negative indicator that can be used for trending to see which way the stock or an index is trending. And ideally, a buy or a double positive buy signal will work nicely when you see some amount of downside coming, and if the stock is fundamentally good and has the chances of bouncing back. So again, a fundamentally weak stock, you should ideally not look to go long. You should only look for double negative opportunities at the highs or at the peaks. So this is a very simple way of identifying the trends and trading based on that. Subscribe to our YouTube channel, post any queries that you may have, and join us in Zerodha via bse2nse.com and get a free training from us. Thank you. Bye bye.